Investing in a lump sum involves putting a substantial amount of money into various assets at once. Here's a guide on how to do it. Financial assessment. Evaluate your financial situation, goals and risk tolerance. Consider your investment horizon, which is the time you plan to keep the money invested. Diversification. Diversify your investment by spreading the lump sum across different asset classes like stocks, bonds, real estate and commodities. Diversification helps mitigate risks. Research and analysis. Research different investment options that align with your goals. Analyze historical performance, potential returns, and associated risks. Choose investments. Based on your assessment and research, select investments that suit your risk profile and align with your financial goals. Open investment accounts. Depending on your chosen investments, open relevant investment accounts. For stocks, you might need a brokerage account. For bonds, consider a bond account. Execute trades. Transfer the lump sum to your chosen investment accounts and execute the desired trades. Buy the assets you've selected based on your research. Monitor and rebalance. Keep an eye on your investments regularly. Markets can change, affecting your portfolio's balance. Rebalance by adjusting allocations if needed to maintain your desired risk level. Long-term view. Investing a lump sum is often associated with a long-term perspective. Short-term market fluctuations are common, but a long-term view can help you ride out volatility. Professional advice. If you're unsure about where to invest your lump sum, consider seeking advice from financial advisors. They can provide personalized recommendations based on your financial situation and goals. Stay informed. Stay informed about market trends, economic news, and changes in your investments. This information can help you make informed decisions about your portfolio. Tax implications. Understand the tax implications of your investments. Some assets may have tax advantages or consequences that you should be aware of. Remember that all investments come with risks. Diversification, thorough research, and a long-term perspective are key strategies to manage these risks and potentially grow your wealth over time.